Started. So good morning, everyone. Welcome to WCFF Sponsor Spotlight Series, Session 8. I am unfamiliar face as Danelle is currently away, but my name is Imogen. I'm very excited to be here. This morning, we are joined by the excellent Scott Pack Business Finance, discussing invoice and trade finance. I'm very excited today to introduce our expert, Mags Serson, who is the Business Development Manager for Scott Pack. Who is just having a little moment to log on in. Hi, Mags, how are you?
Good morning. Good. Thank you.
That's great. So first of all, I just want to say a huge thank you for being here once again. You guys have been a fantastic help throughout this whole series. It's just fantastic. And throughout, while Mags is speaking, you can just use the chat function below and we will answer those questions in time. And at the end of the session, there will be some details on the last slide if you'd like to reach out to Mags or have any other question. But without further ado, I might hand it over to our expert.
Thank you so much, Imogen, and thanks for today. So, look, I'll introduce myself. My name is Magdalene Serson. I am a BDM here at Scott Pack Business Finance, specialising in invoice and trade finance. I just want to make sure everyone can see my screen there. Got a thumbs up. Excellent. Oops, sorry, I turned my video off. I pressed the wrong button. Here we go. So, for a lot of us here on the call today, it might be the first time we've heard of Scott Pack, but in fact, we've been in market for 35 years. We've won a stack of awards year on year, and whether that be for customer service, level of funding, the list goes on, I should probably say. But who are we? So we support businesses with working capital requirements. We help businesses start up, scale up, and turn around. We are Australia's largest non-bank lender, which is quite impactful when we have head offices all throughout each capital city in Australia and New Zealand. So there is a Scott Pack BDM, no matter where you are, that you can connect with. We have local decision makers in our team here at Scott Pack. So not only do you have a localized BDM, but you'll also have that BDM will have access to decision makers in their state, where they'll be able to workshop your client scenario and be able to talk with you and work with you and your client in regards to getting that yes. So I'm going to click through the slides. Just to give you a bit of an idea of the size of Scott Pack, we have lending over 2.25 billion out the door. We have over 8,500 clients on our books today, and we have over 35 years of experience doing what we do best, and that's working capital for trading businesses. So how do we do it? We unlock growth. We're looking at balance sheets. We're looking at clients being able to access their receivables ledger in order to inject immediate capital back into their business. We're supporting businesses with refinancing. We're supporting businesses with restructuring and also through management buyouts. We're starting to see a lot of that particular type of lending at the moment, where businesses are taking advantage of potentially cornering out a new market or acquiring their competitor because their competitor is now wanting to exit the industry. So we can support business owners with the ability to also scale through those means. Being that we have localized decision makers, we can make fast decisions. We can have funding up and running within 24 hours. We have our broker portal that we'll go through later, but it's where you'll be able to also run through the decision-making process yourself to determine what is the right solution for your client here at Scott Pack. So how do we help? We have a house full of products that we covered off previously in our sessions with yourself and Donnell, Imogen, but these are our house products that we do really well in, and that's invoice finance, equally as known as debtor finance, factoring. It's all much of a muchness. The thing that you're wanting to understand is whether the facility is confidential, that is where the debtors aren't aware of our involvement, or are we looking at a disclosed facility, and that is where the debtors are aware that they will need to pay the client's invoice finance account. We also have asset finance that my colleague previously had a discussion about here at Scott Pack, as well as our trade finance facilities where we're helping clients procure stock. Now, whether that might be domestic or international suppliers, and we'll get through that later on as well. And equally so, we have our business loan options that, again, one of my colleagues, Brooke, covered off in a previous session. So we're looking at ways that we can tailor working capital for clients. Before we get into the how we've helped, it's always good to cover off on what is invoice finance and also how does it work? Because some of you may have heard of it already, but just really wanting to get a bit of a recap or a touch up on how does it work. So we'll use some round numbers as examples. A client uploads an invoice to their ScotPack platform, and for this conversation, we're just going to use a round number of 100,000. They upload $100,000 worth of receivables. They can access up to 80% of that receivable ledger within 24 hours. So we turn that 100,000 into 80K, access to cash. With that remaining 20,000, we hold as equity until the customer pays the invoice to us here at ScotPack. Once they have, we release that remaining equity, that remaining 20K, back to the client, less fees. So that's just a round example of numbers of how an invoice finance facility operates. And if we have any questions along the way, please stop me, put your camera on, ask a quick question. We can definitely do that, or put it in the chat and Imogen will flag it with me. So key industries that we support. So when we're looking at invoice finance, it is a tailored solution, and it has specific industries that it works best for. So on your screen that you can see, we work closely with labour hire clients, manufacturing, transport, distribution and wholesale, importers and exporters. So if you have a client sitting in any of these industries that is looking for a working capital solution or discussing with you wanting to raise overdraft limits because they need access to additional cash, please consider ScotPack, because these are the industries that we can back and support in order to look at working capital options or scalable options to assist them.
Perfect. Sorry to cut you off there. We've just got a question come through. They were just asking, is there any industries that aren't factorable in this?
Yeah, really good question. So there are industries that invoice finance is not suited for. Typically, that would sit around the professional services. So a perfect example, an accountancy practice. Yes, they're doing the work for another business, they're doing their tax preparation. But however, just the nature of the invoicing is not something that we really have an appetite for. Being that because there can be variables in that invoicing process, there could be negotiations in regards to adjusting amounts and ongoing work with that client. The perfect example of where we do well, particularly with these industries that you can see on your screen, and I'm just going to take wholesale as an example. Let's just say we have a client and they're supplying Bunnings. Bunnings send them a quote and say, we need 10 pallets of timber. The client gets the 10 pallets of timber, delivers it to Bunnings. They sign off on the invoice that they've received the 10 pallets of timber. It's very black and white in the transaction. So there's a request for services, services delivered, proof of services executed, and therefore the invoice is now payable. So that's a typical black and white transaction that domiciles in each of those industries. So when you're hearing clients look for working capital options, particularly in those key buckets that we just had a look at, these are typically the call cues or the conversation cues that you would be hearing, we hear, and also the client's accountant. They're needing to have access to capital, to buy more equipment, to pay wages, to fund a contract, fund expansion. They've just signed a new supply agreement. There's an opportunity. And again, the second thing after they've signed that agreement is now I need the cash. So these are typical conversation cues that we hear, you hear, and the client's accountant hears. And it's up to us collectively to be able to introduce all of the options that are available in market. Equally so, we have clients that are looking for ways to better manage their cash flow, purely because they might be needing to pay a supplier and looking for cash before they, have a gap between they can even get paid. There's obviously debt that they're needing to service, so their financial commitments, whether they be transport operators, their lease expenses, to have all of that equipment, and also refinancing and importing goods. So there's a procurement requirement to buy stock. So scalable funding solutions. When we're looking at invoice finance, how does it compare to the typical rite of passage, which is an overdraft? You set up your business, you register your ABN, you go to the bank and you say, here's mine, wanting to set up a new business account and I need a little bit of cash. Typically is looking at an overdraft. What might be is two options, is either secured or unsecured, and obviously the rates vary between the two. But when we're looking at a secured overdraft facility, the client will have available equity in their property that they're going to put up as guarantee for an overdraft. Now, depending upon your property portfolio or property, you're going to have obviously an X amount exposure in equity. Some clients might only have 200,000. Some clients have 500,000. But whatever it is, your overdraft is going to be typically set to the available security that you have. With invoice finance, it's scalable. So we're not locking in a limit that's against your property equity. We're actually supplying a limit that grows in scale with the amount of invoices that you raise. So invoice finance typically doesn't require property as security, where as an overdraft, we'd be looking at a form of security. Now, if your property hasn't increased, but your sales volume increase, there will come a point in time in your business cycle that you will be capped.
Perfect. Sorry, I was trying to cut you off in the middle of all that. I apologize. I never know when the right time is.
Just
We
jump
just had
in.
a question come through and I was like, oh, I'm not sure. So someone has just asked, I'm not sure if you actually just answered it, but they said, how would you compare invoice finance to an overdraft?
Yeah, no, perfect. Yep, timely question. This is the perfect demonstration. Look, I have a client, and we'll get through it in a client case study, but right now they have limited equity in their property that they can access, and they've got a fantastic opportunity to scale, and the bankers turn them away. And that's just purely because there's no further equity in order to inject into the business. So they're unable to access working capital to meet the demands of the recently placed purchase order.
And would that also then tie in? Yes, thank you. There we go.
Okay, so look, what we'll do is I'll give you an example of an overdraft versus invoice finance. So I'll let you read it, but I'm going to talk to it because this is actually a live deal that I'm running with right now. The client is a turnaround strategy. So at ScotPac, as I mentioned, we can support clients that are refinancing, that start up, scale up, or even a turnaround. So this particular client would fall more into the turnaround. Their business, great business. They supply into one of the key kitchen manufacturers here in Australia, but they heavily invested in equipment, taking advantage of the instant asset write-off. So they scaled up on equipment, they got a signed agreement, but it hadn't really kicked off as quick as they had hoped. So financials, look, they hadn't been performing, but off the back of this recently signed agreement, they had $1.2 million placed of purchase orders. I can see each and every one in there zero. And they went to the bank and they asked them, hey, look, we need some working cap. We have a fantastic opportunity to hit the ground running, to turn around. We need some money. Based on the performance of the business, and then also based on the available equity, they only had $200,000 of equity in their property that they could offer up. The bank turned them away, which means in turn, the client would have to turn away the actual opportunity. So what did we do? Thanks to the broker reached out to us and said, hey, look, I think I've got a client scenario I really want to have a chat about. Here are the financials. What are your thoughts? And more importantly, here's the opportunity. This is where they're going. Can you partner with them? So going through and understanding the financials, understanding what has happened in the business, where the money has moved, but also understanding the opportunity that's in front of them is what gets the client and the broker and us really excited. So the client isn't turning away the new opportunity. We're actually going to partner with them, guide them, and allow them to take on the new opportunity. So what is the difference that we offer at ScotPac? We say yes when some would say no. We partner with our clients, we provide flexibility with our decision making, and we offer support beyond the funding. So now the client is actually going to get a client manager here at ScotPac, going to work with the client in regards to that turnaround strategy, and just make sure that we're supporting the client where needed to make those financial decisions.
Wonderful. And if, say, I was a client, how quick can it be to set up? So what info would you need to review?
Yeah, sure. So that's a really good question, and actually it ties in perfectly with this one. So what do we need? I'm just going to look here right in the center box. So some basic information is all that we need to start a conversation. That's going to be our age, debtors and creditors ledger, straight out of zero, typically. A sample of a paper trail. So how do you typically invoice for your services that you've delivered? A great opportunity to look at that is it's just the past 3 transactions that you've done with your best customers. and also some basic financials. So P&L, balance sheet, and ATO portal, because obviously, depending upon your customer base, the ATO is going quite hard in regards to recouping debt and setting up payment plans. And it's quite common that we will see clients with an ATO position. That doesn't stop the funding. We just want to understand how we got there. Are we on a payment plan, or are we in the process of discussing and entering into a payment plan? But to answer your question on how quick can we go from start to finish, from the day you pick up the phone and say, Mags, I've got a scenario and I've got all the financials ready, to the time that we finish, for an invoice finance facility, look, I'd love to be able to do it in 3 or 4 weeks. Typically, it's around that 4-week mark that we would start to see something implemented. We don't need the client to move all of their banking over to us. We don't need to have it as invoice finance as a part of, an add-on to another product. It is a standalone solution. So from the point that we understand the client through their financials through to establishing a facility, typically, let's just call it 4 weeks. Okay. Cash line. So Cashline is one of our newer products to ScotPack. If you're a member or a partner with ScotPack, you recently would have received an email from us in regards to our Cashline offering. Look, effectively, it's fuss-free cash on call for your business. So if your business is trading with other businesses, again, the eligibility criteria is where we're looking at. Trading with other businesses, been trading for a minimum of 12 months and does have a cloud-based accounting package. What we can do is look to leverage their existing book debts and establish a line of credit against that. It is a confidential invoice finance facility as such, to say that the debtors won't be aware of our involvement. We partner with you in order to be able to establish that facility for your clients. Okay, so again, I always like to talk about the product, but then also talk about a live case study. So this particular client of mine was happy to actually put their company name to it. So they're an SME right up here in Queensland that provides printing services to a lot of corporate businesses around here in my local area. And we were able to effectively set up a limit for them. So being able to draw down cash on call when they need it to pay suppliers. From start to finish, we had this facility set up and running within 4 days. So there is speed to market when a client is looking at having a cash line facility in place. We can really turn that around quite quickly. Again, basic data that we need, we send you 2 links for your client to sync up to. One is their internet banking and one is their accounting package. We make an assessment and we come back to you. From that point on, our decision makers again are state-based, so we're able to have that conversation quite quickly in regards to eligibility and limits and come back to you and your client in regards to a solution. Okay, keeping things moving, trade finance and invoice finance. They do work hand in hand. And this typically works perfectly when you have a client that's in that wholesale and supply space, or they're needing capital equipment in order to bring it in to then on-sell to a client. So a lot of the time here at ScotPack, we'll have a discussion around improving cash flow, and that might be on the front end as well as the back end. And that's why we call it end-to-end funding. So the trade finance facility, we effectively establish a trade facility to assist clients in procuring stock, whether it be domestic or international. That stock might be a box full of widgets or some capital equipment that they need to get over here to then on-sell to a client. Equally so, we do have trade facilities where we can just bring over that CapEx and roll it into equipment finance. But when we're talking about trade and invoice finance, effectively, we would set up the facility to be able to pay the supplier on your client's behalf. And then once that stock is in and then distributed out to their customer base and an invoice is raised, it effectively in turn, the client manager manages that payment cycle for the client and would replenish the trade account, so repay the trade account, and then the remaining funds would be going into the client's account.
I've just had a question come through. I hope it makes more sense to you than it does to me. That's why you're the expert. Can you explain the cash gap and how trade and invoice finance work together?
Sure, perfect, yep. So cash gap really is I need to pay my supplier, but I'm waiting to get paid. And that's the cash gap. So we're needing to pay the supplier on day one, but I don't get paid until 150 days later. And this is the perfect example. So that's a client's cash gap, and we work with you and your client to really pull that apart. When does the supplier require payment? And when in turn do you get the goods, distribute the goods, raise your invoice, but then you're still waiting potentially 30 to 60 days after that to get paid? That's your client's cash gap. So understanding and creating and tailoring a trade facility that accommodates that cash flow cycle is very different. Even for the same client in the same industry, the cash flow cycle can be very different based on their customers, based on their customer buying power with them. So it's always important to understand the front end and the back end when we are tailoring trade and invoice finance facilities. So we're getting towards the end of the slides, but our product matrix, and I think this is what really sets Scott Pack apart, is that we have a house full of solutions that are tailored for business owners. We're able to run multiple products concurrently with the initial inquiry. As mentioned, if we're just looking at this, the invoice finance facility along with a trade finance facility, we might have a client that is wanting to import some capital equipment via the trade account and then convert that into equipment finance once the asset is here and commissioned. So we're able to put together a holistic solution for your client, understanding more about what their cash flow requirement is. We can then be able to work with you and say, look, I think we can tailor a small unsecured boost loan to get you going whilst we tailor an invoice finance facility. Perfect example. I actually got off the phone to the client this morning. They're acquiring a business, they need a shop fit out, and then they also need to import stock. So in that scenario there, we'll be looking at potentially putting a boost business loan together to help them with the shop fit out, whilst we use a trade facility to help procure those goods. Now they're a large retailer, a large big brand with years of experience. So it's been able to help us in that decision-making process.
And then, so apart from the fact that you have very large facilities, what else sets you apart from other lenders in the SAT space?
Yeah, sure. So when we're looking at speed to market, that's Scott Pack. If I was to be sitting in any of the majors and wanting to tailor an invoice finance facility, that can take not weeks, but months. Our facility here at Scott Pack can take days to weeks. When we're looking at credit criteria, when we're looking at understanding the client more intimately and what potentially may have drove those losses, we don't need you to be, we like businesses that are obviously successful and trading well and they're wanting an increase in their limits, but also we can look at clients that potentially had made a loss or traded at a loss, and they have a really good explanation as to what drove that. We get behind it. We want to understand the numbers, not just look at the numbers. It's probably the thing that sets us apart is understanding the client. Speed, and obviously you have a full house of working capital professionals here at Scott Pack. We are a business that is of 350 or 370 staff members nationwide. We are a business that specialises in specialised funding. So we are resourced. And look, I think the client experience and all of our NPSs and everything else that's wonderful, and our Google reviews really demonstrates that as well. So how to find an opportunity that's in that working capital space. Typically, we talked about the industries that we write large volumes in and what those call queues or those conversation queues might be. But if you've just got the numbers or you're just having a very quick snapshot or a conversation with your client, how would you be able to identify some opportunities that would be right for Scott Pack? Is a client potentially is falling behind on their ATO commitments, or they're entering into a payment plan and needing to be able to have the available cash on time to service that payment plan, because the last thing your client wants to do is miss a payment. Also, superannuation, understanding if that's up to date. Are your clients similar to mine that potentially would be turning away new opportunities due to tight cash flow? Or is there an over-reliance on self-funding? Surprisingly, there's a lot of businesses that dip into their own savings account to keep the business going, which is effectively paying a supplier before they get paid. So are they running off on a couple of credit cards, or are they using their own savings as a nest egg to fund the business to keep it moving? Or are they simply just outgrowing existing facilities, or existing covenants for their facilities that are managing them now, too intrusive, too time consuming? Understanding more about what really are the drivers behind a client. We can fund a small business startup, single invoice, 10,000. Some of our largest clients are in that 150 million to 200 million size book value. And those clients are good quality clients. They simply just outgrew their existing lending with their incumbent lender. So they come and talk to ScotPac as well. So as a broker, how can you identify commercial working capital solutions? Is by looking into each of these. Typically, I think their balance sheet would be able to show you the opportunity. The receivables ledger, we're looking at if they're trading B2B within Australia and offering trading terms. That's the perfect opportunity to introduce working capital. Trade finance on their payables. Are they got domestic or international suppliers? What are the payment terms? Are they needing to pay suppliers before they even get paid? Understanding more about equipment finance. Everyone knows equipment finance, but where we do set ourselves apart, that would have been touched on in our previous webinar, is that we have an appetite for startups. We can support business owners if they're able to demonstrate that they have a work source letter. Not very many lenders in the market are able to do that. We also have our business loans and our line of credits, and also our home loans for business owners, and being able to utilize the available equity that they have in their property and turn that into a business loan that might be in turn to acquire another business, or to pay the ATO, or just to be able to have some access to cash. So once you've identified the opportunity, how do you get it over to us? You spot the opportunity, I'm happy for you to give me a call. My details will be shared at the end of this webinar. So please take a screen grab or reach out to Imogen or Danelle to grab my details. But spot the opportunity, give us a call. Let's workshop the scenario together over the phone. Tell me a little bit about what you know about the client and what are they looking for. From there, we will start to work with you and the client on tailoring a working capital facility. Now, let's just say we need to make sure that you're accredited. So if you're with an aggregator that deals with ScotPac, you're automatically accredited with us. There's no volume required in order to send us a deal. And we keep you informed at every stage of the transaction. I personally have some brokers that give me a name and a mobile and say, Mags, I'm at capacity. This is a little bit above me. Can you just reach out to the client, see if there's something there that you can offer? And if so, let me know how you get on. So I have brokers that I work with that are just like that. Equally so, I have brokers that are, Mags, I want to be on every email, every phone call, conference, loop me in. This is one of my best clients. I just want to be across the conversations that I had. Again, so we also tailor our approaches to your request. So if you have a name and a mobile number and you think there's an opportunity there that you're wanting to introduce us through to, we can work with that. If you want to be a part of every step, you can also make sure that you're a part of every step. Before we finish up, ScotPac's partner portal. We work with your clients to make sure that they have the right facilities in place, but also you are a client of ours. And we also want to make sure that you have every chance of success. So here at ScotPac, we've heavily invested into our partner portal. It's a great space for you to go and explore over a cup of tea or coffee and just take 10 minutes to deep dive through. We have asset finance calculators. We have working capital calculators. We have marketing collateral that you can leverage as your own. It comes from your company, not us, and the data is yours, and it also shows you it's seasonal. So we have content writers that cover off leading into the holiday period or end of financial year. So I really encourage you to take 5 minutes and have a look at our partner portal. Equally so, you can lodge your asset finance leads, obviously, via our partner portal as well, and as well as our unsecured lending. And here's the contact us. If you feel like you've got a scenario that you want to have a chat about, please take a screen grab of my contact details on your screen now. give me a call, shoot me an email, connect on LinkedIn if you would like to. But look, more than happy to step you through what type of working capital scenario that we could tailor for your client, if they're eligible, what we would need. And obviously also you're a business owner and we can run you through the brokerage of our working capital transactions.
Perfect. Thank you so much for your talk today, Mag. Super appreciate it. And thank you, Scott Pack, as always, for supporting the WCFF. You guys have been, honestly, we can make a podcast series out of some of the things you guys have been talking about with us. It's awesome. If you would like a copy of this, anyone, it will be available on the WCFF Facebook page a little later on today. But just to thank you again for all your help. Please feel welcome to reach out at Mags at any point. But otherwise, we all hope you have a lovely Wednesday. And thanks again.
Thank you. Thanks, guys.